Hey, this is Alex from the Aplos Academy. Today we're going to take a look at transactions, what they are, how and when you record them, and how they impact your nonprofit's accounting system. If you've created a nonprofit chart of accounts and are ready to record transactions, this is the course for you. What are transactions? In the previous lesson, we learned what accounts are and how you set them up to represent the 5 areas of accounting: the money that you have, owe, receive, spend, and your overall worth. These accounts are given value by recording transactions, which are essentially the happenings within your organization. Receiving money, spending money, paying bills, and transferring money in between your banks are all examples of transactions that happen on a daily basis for your nonprofit. So how do you record transactions using your accounts? Before we dive into the format, I want to tell you about the relationship between the types of accounts. Once you understand this, everything else becomes a lot easier to deal with. Accounts work together in a system which is called double entry accounting, which basically means in every transaction there's going to be 2 sides. One side is called debit and the other side is called credit. So before we move forward, forget everything you know about the terms debit and credit. It doesn't mean your debit and credit card, and it doesn't even necessarily mean debiting or crediting an account. In accounting, debit and credit mean something completely different than what you've ever learned. You're welcome. There are 5 types of accounts, and each one is increased or decreased by a debit or a credit. If you're increasing an asset or an expense account, you would use the debit column. And for increasing liabilities, income, and equity, you would use the credit column. Every transaction has a debit and a credit amount, and these amounts will always equal each other. Let's take a look at an example so you can see how this actually plays out. So let's say you go to the store and you buy some supplies, some paper, pen, stapler, that all amount to about $50. When recording this purchase, you're going to use one of your expense accounts, since they're used when you record spending money. So you choose the expense account, office supplies. Since expense accounts are increased by debits, you're going to put the $50 in the debit column next to the office supplies account. So what is the other side to this transaction when we're doing double entry accounting? Well, if you purchase these supplies with money from your checking account, your checking balance is being reduced. Therefore, the other side of this transaction would be your asset account, checking, for the credit amount of $50. Again, since the expense account is being increased, it's going to be on the debit side, and since the asset is being decreased, it's on the credit side. Debit is 50, credit is 50, they both equal each other, there's your transaction. So welcome to recording transactions. This process is called double entry bookkeeping, and it's a necessary part to any accounting system. Let's take a look at one more example, this time using income. So let's say you received a donation for $100. This is money that's being received by your organization, therefore it's considered income. The income account you're going to use is called contributions, and since it's increasing an income account, it's going to be in the credit column. So again, what is the other side to this transaction using double entry accounting? Well, if you're depositing the money into your bank account, in other words, your checking, that would be the other side of the transaction. So since assets are increased by debits, you can see that this works out in our transaction. So your income is increased by the credit side, the assets are increased by the debit side, the debits and credits balance each other. Boom. So as you record transactions for your nonprofit, remember the chart that we used a couple of minutes ago. Remembering this chart is going to be essential if you ever need to figure out the double entry accounting system. So how do you record these transactions? This is going to happen one of 2 ways, either by hand or through the use of some sort of software. Obviously software is easier, but if you do it by hand, you need to understand 2 things: the general journal and the general ledger. The general journal is where you're going to manually record the transactions, like the examples we mentioned earlier. You're going to record both accounts that are used and their debit and credit sides, and you might also want to record some other information like the date, where you purchased something, who gave you money, or any other details. Once you have the transaction recorded in the journal, you would record the account details in the general ledger. The ledger is a further breakdown of your account balances and the sum of your transactions. So that's where we're going to stop for today on recording transactions by hand, since by now you're probably going a little cross-eyed. The journal and the ledger are both entirely replaced by software, which makes the whole process infinitely easier. Software allows you to record transactions with all the details that you need. Plus, they usually have screens that are a lot easier to use, so you don't even have to do double entry accounting. You'll record one account that you're using, and they'll automatically do the other side of it for you. Plus, it will automatically keep your account balances up to date, which will allow you to run reports, which we'll cover in the next lesson. So as a nonprofit, when you look for accounting software, make sure that it has these 3 things: fund accounting, nonprofit reporting, and integrated donations. So what's next? Now that we've learned how to structure a chart of accounts and record transactions, it's time to see how everything boils down in what's called generating reports. We're going to take a look at the 2 most commonly generated reports, plus the reports that you need as a nonprofit as per the IRS guidelines. Until next time, make sure to read the content below because it's going to go into a lot more detail on what we covered today. Plus, if you're interested in nonprofit accounting software, be sure to try Aplos' 15-day free trial to see how simple this whole process can be.